The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, soybeans and soybean meal on the day Thursday really were the shining stars leading the trade to the upside. Looked like we got through some key chart objectives, especially in July beans. Could that trigger some additional short covering? That remains to be seen. Corn right there as well. A decent day in the corn market, a little more mixed in wheat, and a solid rebound in cattle. We're going to talk about all of this green on the screen. Joining us for a conversation today, Brian Doherty, Senior Market Advisor at Total Farm Marketing, is with us here today on the show. Brian, always good to talk with you. Thanks again for joining us here on the program today on a day where, hey, some green on the screen. We will we'll enjoy that, won't we, Brian?
Yeah, we will. And thank you, Jesse. My pleasure. And other than a little bit of a raspy cold, things are good today in the world of row crop commodities as we've got a really good push on what appears to be, I'm going to call it pesky, but a pretty consistent pattern of rain showers every third, fourth day coming in over the next 10 to 14 days. And now that pushes a lot of planting potentially to mid to late May. And we'll see if this pattern sticks around. The Southeast is getting wet. Parts of Brazil are having trouble finishing up bean harvest. Argentina bean harvest. Bean meal has all of a sudden kind of become the darling of the complex. And up we go. So, a lot of green.
Well, and bean meal, to your point, solid day there, up 14, $15 a ton. Soybeans themselves really kind of pushing us back to that $12 handle here, just below it. July $11.99 at the close, but getting that July contract above what appeared to be some pretty significant chart resistance targets, like that 11.85 mark. And so I have to wonder here, Brian, if this with such a solid close on Thursday, can that maybe trigger some more fun short covering into Friday of the weekend, Brian?
Well, I think these funds have to be pretty nervous because they've had pretty strong, large short positions. And all of a sudden you get some quick turnarounds like we have, and this is going to be kind of costly to hold positions. So short covering, I think, is in order. We saw yesterday estimated somewhere around 40,000 contracts of corn, maybe somewhere in that area were bought back, and that we went yesterday from a down day to an up day, solid close, follow through today. The market feel is starting to turn a little bit different. I don't know if we're out of the woods. We talked about, you mentioned those July beans, 11.99 closed today right up against the upper Bollinger Band. And it's not like we haven't been here before. We were here on April 8th, so we're here 3 weeks ago. But a really solid close, and that's indicative usually of short covering late in the session, or people willing to buy in, saying, hey, there's strength, I want to buy, or both. Likely both right now.
In that corn market, I know some folks I'd been chatting with had talked about kind of the same when I mentioned beans there. July quarter, if we could get that 460 kind of handle would maybe be a good sign to trigger some short covering in corn. It feels like the corn short covering's been a little more muted here in July corn, 459 3/4 at the close, but still feels like this corn market, some good solid support behind it, albeit corn is definitely moving slower here as of late, it seems.
It is. There's no shortfall of old crop inventory on hand. Farmers are selling. They'll sell the rally here, and they should. There's a lot of inventory out there. But when you kind of take one step back, and now you start thinking about that March 28th acreage number down 2 million from expectations. And then you start thinking, planting delays, and historically there is some relevance to later planted crops, maybe being off a few bushels an acre. And now instead of carryout sort of gravitating toward 2.4, now you're talking about under 2 potentially, if that's in that scenario. So it's still enough inventory, but when you start thinking about the northern hemisphere here, China, U.S., 2/3 of the world's corn crop is still northern hemisphere. And you're getting some mixed weather in Brazil. Some areas are too wet in the south, again, too dry. So the market's starting to kind of take note of the weather. And as you know, Jess, I always kind of put things into is the weather ideal or less than ideal. There's a lot of less than ideal weather right now. If you're a
Mm-hmm.
farmer that 3 weeks, 4 weeks ago, you were thinking I'd have all my crop planted by the first week of May. Now you might have half, you might have none, you might be done. But there's a lot of people. That's a big spectrum right now. But the guy that's half or none or somewhere in that territory, he likes today's price, but he'd rather be planting corn. So
Mm-hmm.
my point is, he's not jumping through hoops to sell corn. He's looking at this going, I don't know if I want to sell anything right now. And so that all kind of capitulates on each other. You've got kind of a risk on day. Stock market's back up. Energies have been beat up lately. Looking at some small green there on the screen, but yeah, just a good sense of a weather market starting to develop and the market responding.
To that point, I guess I'll be the devil's advocate here just a tad bit. I mean, if a farmer gets into that mindset of, hey, I don't want to sell corn right now, and they see a good up day and they're thinking, well, maybe if it goes higher, I will. But uh, to that point, should you be looking at managing some risk here in this window, just not knowing the unknowns of a weather market here? Brian, I mean, what are your thoughts on that perspective?
So December corn is right back up to where it's failed twice now since the beginning of the year, that 480 area. So it's easy to get bullish when kind of get emotionally attached to this, and then bull markets, that's what they do. So are we in a bull market? I would say not yet. We're just up against resistance. But if it does break this resistance, and today is something I want to point out, that the December corn contract today not only closed above the Bollinger Band, but there's two bands, an upper and a lower, closed above that. That's impressive. It also closed above the 100-day moving average. We have not seen that in the December corn contract since the first week of December. So think
Mhm.
about that. It's the average price for the last 100 days. We're starting to build, at best, or I should say at worst, a sideways pattern and maybe some upward momentum. Um, so how do you tackle that? Well, if you've got no sales made, you always hope your first sales are your worst. So start trickling in. I've talked about all winter, this 475, 480 area is kind of a pivot point. Corn could easily go to $4 if we have everything fall together right on production. On the other hand, we could run the 502, fill a gap, 550. So I think you start trickling some sales in a new crop if you're in a good space to do that. Otherwise, look at some put option strategies. And you don't have to spend a lot, but you can get a nice flooring mechanism on a portion of your crop.
Let's talk livestock a little bit here, Brian. Really a solid rebound in the cattle trade as it's all about news headlines again, this time getting a positive one that ground beef that was tested, they didn't find any traces of bird flu in the ground beef. And so that led to some green on the screen there. I noticed some green in the dairy market Thursday. Hogs were quiet, but overall felt like a positive day in this livestock trade. But again, it just feels like this market is coming down to a lot about news headlines here and psychological impacts, right, Brian?
Well, it is, and I'll start with the dairy first. We've got some real demand or push on the cheese market right now. So you are seeing higher cheese prices. I'm not sure that's emotion, but it's the reality of, well, there could be some lesser production from the bird flu and this transporting cattle and testing, and how do you do all that? And, the market's buying that uncertainty right now. But I think one thing in the dairy that, and we're seeing some of our best prices of the year so far, is that I want to point out is that when you look at kind of the big picture perspective, let's go back to what we've been talking about for multiple months. A high beef market, farmers are keeping cows around longer, so the production's been a little bit longer to, one, extract another milking cycle out of them, but two, get another beef calf out of them as well. And so I still contend that the big picture perspective has a slant toward tightening cow numbers, tightening heifer numbers for milk. So, like the back months responding finally, and I like the demand apparently responding. We've been worried about economics, and yet the market, here we are. Um, when I look at the cattle market, right, good news today, Jess. A lot of volatility, right? And then a lot of
Mhm.
concern too that, and I've expressed this over and over, that can the economy, can the consumer chase higher price beef? So I still am leery of that. We're supported on the supply side. You can slice it any way you want. We're supported on the supply side. So good recovery today, good cash market. The board's still well below. And so that kind of concern there is that the board is still anticipating that cash will weaken. I'm not so sure. I'm just not so sure. I wouldn't be surprised if the board added $4 or $5, maybe cash looting up a little bit. We got what's called contango, where you just got this, big diversion in cash versus futures in this case here. So, like to be supportive of that. Hog market, I'm not sure. I thought it overdid itself to the top side, and I feel more vindicated that it's probably where it should be.
Brian, good stuff. And I know, as you mentioned at the top, you're fighting a pesky cold, so we won't beat you up too much longer here. I know folks can find you guys at totalfarmmarketing.com, a phone call 800-334-9779, or Brian with a Y at totalfarmmarketing.com for an email. See, I'll take that off your plate here, Brian.
Thank you.
Thank you for thank you for joining us as always. Get well soon, sir, and we appreciate the time as always. We'll talk to you again real soon.
Absolutely, Jesse. Thank you very much. Just wanted to point out, too, that the cutout values in the cattle still support higher values. So anyway, thank you, Jesse, very much. Appreciate it.
You bet. Brian Doherty there with Total Farm Marketing joining us here on the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.